Hello, YouTubers. Welcome once again to this channel. And in today's discussion, we'll be continuing from our series of discussion on chart patterns. And this time around, we'll be continuing with the reversal patterns. Some patterns you see, and you know the trend is about to change direction. You see these patterns in a bullish market. You know the bears are coming in, and you're about to see the market going bearish. If you see it in a bearish market, it means the bulls are coming in and you're about to have a bullish run. So without wasting much time, I'm trying to make all my videos as short as possible so I don't bore you. Well, I hope you all have been having a great week trading when you're in your personal life. Hope you've been having a great week. No matter what it is, just know you're strong. You're going to get through whatever it is. Even in your trading, you're going to be fine. Just be disciplined. Do not over trade, and you'll be fine. We've been calling out some trades on our Telegram platform, and we've been making some pips. We've been making some pips. We are still waiting for some setups to play out. So quickly, let's continue for the business of today. So we're looking at two major reversal patterns today, and the first one is called the double top formation. Now you see this formation in a bullish run, in a bullish market. And when you see this formation, it simply means that the market is about to reverse. You're about to have a bearish run. So how does this form? I'm going to explain this with this illustration. I'm going to go to a live chart and see what is happening on a live chart that is a double top forming and how we can trade it once the setup is complete. Remember, Forex is all about patience. It's a game of patience. If you think you know yourself, come to Forex and then you know yourself better. If you can be patient or not, you see the true you. So great. So how does this formation form? In an uptrend, in a bullish market, price is coming all the way, and there's a long time coming here. We'll see it on the live chart. Price is coming, and then price goes all the way and hits a resistance zone here. And what happens after price hits this resistance zone? Price comes down and forms and finds a support zone, which it hits, goes back up to the previous resistance zone, and then it hits that resistance zone, forming a double top. That's why they call it a double top. It forms this pattern, and then what happens? Price comes down to the previous support, and the pattern is completed when price breaks through this support zone. Now it is most likely that you're going to see a retest after the break of the zone of the support. So what do? You wait. When it breaks the zone, it's most likely going to come back to test that broken support. Market will not be nice to you. Market won't want to give you one straight movement. So remember, market moves this way. So it's most likely going to come back for a retest and before it keeps going down. So it's very important to wait for that to happen. Now, it is very important that in this formation, you have to make sure that the pip count in the whole bullish run is far bigger or far larger than the pip count for this formation. What do I mean? I mean the bullish run has to be longer. It has to have gone a long time. It has to have a larger pip count. When you count it, how many pips has this bullish cycle done? Or you can be barely looking at the chart, you should know by looking at it and see how far it has gone. It should be bigger and larger than the pattern itself. Pattern should be smaller than the whole run. So once that happens, you know indeed you have a double top formation and you're about to have a bearish run. So great, that's it. That's explained as far as I can. Okay, let me talk about setting your TP and your stop loss. So great. After this breakout has happened, you can set and you retest and you enter a sell here. Set your TP by using a measured move. measure the distance, the pip count between this support zone and this resistance zone. Calculate it, draw a vertical line, or you can just punch your calculator. You see the difference between these two, and then you set it as your TP, and then you set your stop loss above the broken support zone. So great. Let's go to a live chat and see what's happening. Today is 11th of June. So this is a live setup. We're going to wait for them to play out, and then we go all in. So great. So we're looking at NZD USD for the illustration on the double top. So you can see market has been having a good bullish run. You can see the pip count is far larger, far bigger than the setup itself. You can see you've had a lot of pips coming. Those that bought from here must have been in good profit. You see it coming, and then boom, it finds this. Let me zoom in so we can see properly. I'm using TradingView for this analysis. If you've not noticed, I talked about TradingView in one of my previous videos. It's a great website to do analysis. Great website. So price coming from an uptrend, and then it finds this resistance zone, boom, and then goes down, finds this support zone, and then goes back up to the previous resistance, and boom, hits it again. And now price has come down. So we're going to wait for it to break this zone and retest the zone, and the pattern is completed, and we sell. So now let me quickly mark it up and also send it to the group. If you're interested in joining the group, kindly chat me up, so I'll add you up to the group. So great. So here we have let me try and draw this up nicely so you can see. My laptop is hanging. So apologies for that. So let's see. Come on. Let me just delete this and try again. It's crazy. My laptop is giving me some. So great. So here, this is the zone. You can see this is the zone, the resistance zone. Touch down, back to the same zone. Respected, it comes all the way down. So let me try and change the color of this, because I always try to use, for my resistance, I always try to use color red, while I use color blue, color green for my support zones. So there we have the resistance. You can see price comes, bounces off, touches again, and bounces off. So then on the support zone, let's draw the support zone here. So this is a zone we wait to be broken. This is a zone we wait. Once it gets broken, change the color to green. Green. What just happened? Delete this and impute that. I'm sure while I'm doing this, you can understand for yourself how to use this websites, TradingViews, to carry out analysis on your own. So here, this is it. So resistance, support, resistance. Now the support, the structure has to be broken. So once price breaks through the structure and retests, we go short, we sell. So I expect, let me do a short position and show you where to put your TP. So remember, using a measured move, It calculates the difference between this resistance and this support. I've taught us how to do pips count. If you don't know how to calculate your pips, go back to my previous videos and learn how to calculate pips. You can use the difference between this zone and this zone. Once you calculate the difference, will give you your pip count. You can set it as your take profit. But here I think I'm going to write this longer. So let me quickly do what I expect. Great. So this is what it should look like. Your stop loss above the broken support zone when it breaks, and then use this measure. You can use the measured move, so your TP can be around here. If you're using a measured move, if you're not using a measured move, you can just let it ride longer because it's a reversal pattern, so it's probably going to ride longer. So hey guys, that's it for the double tops. I use a live illustration of NZD USD. Wait for that breakout. Forex is a game of patience. Do not rush it. Do not say because you're sure it's going to break out, let me sell right away. Do not do that. Wait for it to set up and then you go in. I'll show you another illustration using the Euro AUD, and I'll show you why you have to wait. Why patience is key. So quickly, let's continue from our story. Let's go to the next pattern, which is the double bottom. The double bottom is found in a bearish cycle. And what it means is that the price is about to reverse the price. You're about to see a bullish run. So pretty much the same thing with the explanation on the double top. Price is coming from a bearish cycle, from a bearish run. Price comes all the way, finds this support zone, we expect it to go back up, finds a resistance zone, which it bounces back from, and then hits the previous support zone, and then goes all the way up, hits the previous resistance zone. Now, after this hit, you now have a confirmed double bottom, two bottoms. You can see it. And then boom, price goes all the way, breaks through this zone, this resistance zone, comes back for a retest. Always wait for a retest. You retest, and then boom, you go long. So remember, you can use a measured move, calculate the difference between this zone and this zone, use as your TP, and then set your stop loss below the broken resistance zone. So without wasting much time, let me go to the live chart and show you a setup on the euro, in the euro against the AUD for a double bottom pattern. So great. You can see this, boom, boom. Let me zoom out so you see the run, where it's coming from. You see, it's been coming all the way. Long-term bearish market. See, price has been coming all the way down. Remember, the pip count between this is longer than the whole formation itself. That gives it more validation. So let's chat this up. So great. So price was coming bullish, bearish run, finds the first resistance zone, goes up to this. Sorry, I meant a support zone. Goes up to this resistance, comes back down to the previous support zone, goes up, tries to break it this first time. It couldn't break it. Price comes all the way down, but doesn't get to the previous resistance. If you have done on our charts, on our membership chat group, we were talking about this. When price went to this this resistance zone, price came back and we drew a Fibonacci level, and you could see that this was on the 61.8 level. You could have easily set a buy limit at this point and you would have gotten in for a good buy. I woke up to about 120 pips in profit after that happened. So, but well, that's not what we're talking about here. We're talking about the double bottom. So, but I'm just giving you a further illustration so you can see you can use these tools at different intervals. So great. So once you have your break of this resistance zone, you're going to have it has broken out. This candle has broken out. So we're going to have a retest, and then we're going to go all the way long. So let me chart that up properly for you. This should be our support green, support zone. You can see this. One touch, bounce up. Second touch, bounces up, and then comes for a little retracement to the 61.8 retracement level, and boom, goes up. So let's draw another. Let's mark up this zone, the resistance zone. So remember, this is a live chart. This is the euro against the AUD. So, well, market hasn't really given a very good breakout. I don't like this breakout I'm seeing. The candle is too small. I still expect a further breakout. I still expect an aggressive move away from this zone. So here, let's change the color. This red. Great. So this is what euro against the Australian dollar looks like on the double bottom formation. So we're simply going to wait for this zone. We're going to wait for this zone to be broken out, and then retest, and then boom, go all the way up. So guys, I think that will be it for now. If you have any questions, do not hesitate to ask me on the comment section. Okay, so let me quickly give a bonus point how to insert your Fibonacci on the trading view. You can see this, how we got in on this buy yesterday. So remember, its price is going up. You should start from the recent low to the recent high. So here is where we find our here is where we find our Fibonacci retracement tool. You can see it here. Great. So we add it up from this bottom to this top, to this top here. Great. So to this top. So if you zoom in properly, you see that this 61.8 level was wicked off by this candle, and price went all the way up. So guys, that's it. That will be it for now. Kindly subscribe if you haven't hit the subscribe icon, so you get notified when I release more videos on more chart patterns and more. I'll also be doing weekly reviews in subsequent times. Let's look at how we can catch tips during the week. So guys, take care, and remember, do not overtrade. Do not blow your accounts, and play safe and keep safe.